Hello everyone, good evening. Welcome to Officer 24/7. My name is Niharika Walia Bhatnagar and I'm with you with the specific area of ABFM, Advanced Business and Financial Management. Everybody, how are we doing? I hope you're doing all good. Acha, what is it that I want to discuss today is the topic of corporate valuation. We had started it, I think 2 days back now. We started this particular topic and I think we'll be finishing it off within the next, maybe this class or to the next class. Acha, we have talked about book value approach. Book value approach clearly says कि ठीक है ना, when we talk about the books of accounts, we are using the book value approach if it is not too primitive in nature, मतलब it is more or less updated. If it's not, it's better to revalue the books of accounts so to have a clearer look at it. Secondly, when we talk about the books of accounts, we need to make sure that the books are reliable as well. If they are not reliable, then there's an issue. Why? If they are not reliable, then the issue arises ki how can we decide that there won't be a problem? To be very honest, I think I'll be scared ki I have used a particular method, but that method is not reliable. So your entire decision making on the basis of which you are going through, it can go wrong, right? So it is important that the information that you're getting is absolutely correct. The decisions that you are taking up in terms of valuation of a business are going right, isn't it? So in this case, what is the particular answer that we have to look forward to? In this case, we are going to look forward towards an organization which is viewing the books of accounts which are reliable in nature. Only if they are reliable, then only we can go look forward towards those cases, otherwise we will not. Based upon this, let's understand this specific area altogether. Chaliye ji. Now let's start with the session. Acha, before I start with the session, everyone, we're talking about corporate valuation today. There's something I want to share. Have you reviewed our courses yet? If you haven't, then please go ahead. Our case study batches here. Tomorrow I'll be meeting you at 7:30 in the morning for the revision batch as well, where I'm discussing the case studies. What you need to do is go into the area of CAIIB in 2024 November and see these are the batches. We have Sankalp comprehensive batches there, and even our case study batches also there. All the batches have been introduced here itself. What you can do is just check it out. The November batches are all online. Even the revision batch is also there. What you need to do is click on the specific area. For example, you're looking forward towards our video course. This is all recorded, है ना? So just click on this, click on Y541, use the code Y541 and you can get a discount of up to 77. Acha, currently 78% discount is going on. So you can get it up to 4944.77. That means 78% discount. This is for the recorded videos batch. ठीक है? So this is something which you can definitely look forward to. चलिए then, let's start with the session further. What say everyone? चलिए then, let's come back and talk about that part. In the last class, we have talked about the book value approach. I'm starting with the next approach, which is actually called stock and debt approach. Acha, what are the underlying assumptions does the stock and debt approach to company valuation rely upon? Even when we talk about this specific area, visible now? When we talk about the specific area of stock and debt approach, what do we have? Under stock and debt approach, what do we have? Historical cost principle, market value, or next is fair value, and last is going concern principle. Going concern principle is not the problem there. What do you think is going to be the answer? That is market efficiency. If the market is efficient, then the market value would always be higher. What do you think? Hannah, isn't that true? Got the idea, everyone? When we talk about stock and debt approach is basically stock along with the area of debts that we have taken. So when we are combining stock here, it means share price. In this case, can you see when we talk about the term stock, stock here doesn't mean anything else, but it means clearly the share price of the organization. How do you find this word stock even? Okay. How do you find the value of, oh, I'm sorry. How do you find the value of the stock? That is your share capital plus your long-term debt minus the cash. ठीक है? Next point, some appraisers argue for using an average of recent stock prices instead of single price on the valuation date. What is the main reason behind that argument? Why is it better to have an average? I think average gives you a better view. That is what I think about, because you're not relying on one particular day only. You're looking at a pattern of the organization. Done? Done, everyone? Market inefficiency leads to inaccurate single day. Company manipulate the stock prices, you can do that. The average price reflects future growth potential. Obviously, when you look at the pattern over a period of time, then you realize more. It simplifies the valuation process. The correct answer is market inefficiency. How can you rely on the market? And I think if I really have to find, I'll be looking forward towards the valuation on one specific day. है ना? How can the book value approach be modified to account for outdated value of assets? Matlab, I think the book value approach should not be used when your account books are too much, I think I would say when it is too much primitive in nature. Now, everyone, reduce the book value from the cumulative depreciation, book value from the average profit, net book value with the current replacement cost, or fixed depreciation at the book value regardless of age. नहीं यार, age is important, because otherwise what will happen? Your asset valuation will go wrong. So in this case, one part is that you replace the particular book value with the current valuation. Current valuation can help us more. है ना? Done. Now let's move on and talk about the next part. According to the efficient market hypothesis, when valuing the company's securities using the stock and debt approach, you should A, use the average price, or use the market price, ignore the company's debt completely, or adjust the market price. Hanchi? चलिए, now when we talk about the specific area of market hypothesis, I'll go for using the market price on the valuation date because this gives you the exact valuation, which is way more correct. Next point. The first stage of the comparable company method involves what? Comparable means you're actually comparing your organization situation with some other organization, right? The company's financial statements, overall economic situation, or the target company's competitors, or the valuation multiples. I think the very first thing that I have to look forward to is economic situation. When I'm trying to compare myself with some other organization, I really have to see how does the economy works. If the economy is going good, then it's a different scenario, isn't it? Chaliye, next point. The third stage for the comparable company method. Identifying comparable companies, analyzing the specific area of target company's financials, then selecting the appreciation, appropriate valuation model, or determining the final company value. Comparable company means we need to look forward towards a specific company only, na? If I want to compare my company with some other company, I need to know what exactly that other company is. Till the time I don't have a clue about that other company, how will I find this? चलिए, common multiples used in comparable methods. Your ROI, PE ratio, current ratio, debt to equity ratio. Done, everyone? अब तो टाइम लगेगा 7:30 के बाद. Okay, apologies. Hanchi. Now, when we talk about the common multiples in terms of the comparable company method, what do we have, everyone? The correct answer is price to earning ratio, PE ratio. The formula for PE ratio is MPS upon EPS, market price per share, and divided by earning per share. ठीक है? Done, everyone? So in this case, what's going to be the answer? When we talk about PE ratio is MPS upon EPS. It's a very important ratio which is used in the questions. The final stage of the method involves what, everyone? The final stage is applying a single valuation multiple comparing the target company to similar businesses or adjusting the target company historical data and calculating the weighted average cost of capital. One of the most important thing is to look forward towards comparing the target company to a similar business. Till the time you don't do that, how will you find where you stand? You know? Done, everyone? Chali. Everyone, please download the app right away, because right now, if you download the app, you will get 1% extra discount. Plus, the previous year questions are absolutely freely available in our courses there. If you look at the particular course, and I think this would be really helpful for you for the examination, right? So, please go ahead and check it out right away. What is the concept of the day, everyone? The concept of the day is WACC, weighted average cost of capital. Is it important? Yes, it is. Theory, practical, both. In terms of weighted average cost of capital, WACC is equal to cost of your equity into its weight plus cost of debt multiplied by the weight of debt plus cost of preference shares into the weight of preference shares. This is the specific formula because every single part of it, equity, preference shares, equity is owner's money, preference shares are basically also they are kind of people who are directly part of the organization. And the last one is your preference share. Debt. Debt matlab outsiders money. है ना? So in this case, when we talk about this specific area, weighted average cost of capital, which is also called WACC, how do we find that part? WACC can be set as a firm's average cost of capital weighed to reflect the different sources of capital like common stock, bonds, and it carries different return expectations as well. Done now? That's the question for the day. Chaliye, that's it for the day. Just a moment before I end our session. Everybody, please go through the specific area. The video courses are out. You can check it out on our website, on our app for further details. Use the code Y541 and get this particular course right away. Don't let this good opportunity go out of hand before the examination starts. Please make sure you have corrected all the specific requirements and you are absolutely clear what are you going to do on the last day of your examination. So that you can prepare